There you go.
Hi there, I'm Corey Smith with Concierge Real Estate Services. Welcome to our second episode of our home workshop series. Today's episode is sponsored by AFN Mortgage, Joe Stefani Home Loans made easy. So today we're here with Joe Stefani. I'd like to welcome you.
Thank you, Corey. Thank you for having us.
No, our pleasure. Thanks for coming. We're happy to have you here as one of the leading experts of lending in Merced, and in the area. You know, we wanted to talk to our viewers and our customers about home loans and what's going on in the market today. What everybody hears that there's like high interest rates. You know, how bad is it?
There's a lot going on. There's a ton of market volatility is what we refer to. Interest rates are up and down, so it's crazy time. You know, what we're seeing is unprecedented. Something I've never seen in 22 years that I've been in the business, and I don't think people who've been in the business 30 years have seen what we're seeing now. You know, it's just so unpredictable. Interest rates right now are between 6 and 6.5%, depending on the type of mortgage you're looking for, and we don't know what direction they're going.
Do you think? So we don't know, right? They could go up, they could go down.
A lot of uncertainty right now.
Yeah.
A lot of uncertainty.
Okay.
Yep, exactly. The Feds are scheduled to meet soon. The anticipation is that they, you know, based on news we heard yesterday, they could potentially raise the rate another half a point, which would impact us. And you know, we just don't know what to expect.
Okay, sure. So when we're dealing with times like that, do you think it would be a good idea for our buyers to make an offer because maybe the prices are coming down now, even though the interest rates are high?
I definitely think right now is the time to buy. I use kind of like a sliding scale. For instance, when rates are up, home prices are down. And when rates come down, home prices go up. And right now, I think it's a great time. It's always a good time to buy real estate, especially if you're in it for long term, because, you know, history proves that, you know, property values increase over time. And so it's always a great investment. We do anticipate all the information that we're getting from the experts, the people that are in the know, say that rates are going to come down in the near future and that property values are going to go back up. So, you know, in my opinion, it's a good time to buy. Now, I do tell all my clients that, you know, when you buy a home, you get a 30-year fixed mortgage, plan to be in that for 30 years, just, you know, because there's no way of telling what could potentially happen.
There you go. So plan for the worst case scenario, but hope that, you know, it could come back and you could possibly refi later, right?
Exactly. There's a saying we use in our industry: you're married to your home, not your loan. Okay. So I don't, you know what I mean?
Yeah.
And honestly, you know, the past 20 plus years has proven that that is the truth. You know, most people that I've done loans for in the past that had, say, an interest rate over 5% were able to refinance and drop that rate drastically. So
that's a good point. And yeah. Actually, I'm one that did that. I bought my first home. I think it was at 5.25.
Yep.
And then several years later, I refied at like 3.25.
There you go.
Right.
Yeah, that's a perfect example. And
yeah.
that's, you know, so.
Yeah. And I gained equity all that time too.
Yes.
And then 10 years later, I refied it again and pulled money out. I mean,
and leveraged it and bought another property.
That's right.
That's how it works.
Yeah.
Exactly. Yep.
So really, it's important just to get in the game.
100%. Just get in the game. Get in when you can. So, like I said, there's never a bad time to buy a home.
Yeah.
Yep, so.
Excellent. Okay. And then, so because with the prices coming down, we're going to see a little bit of a shift in more of a buyer's market. So with sellers, what can they do to make it more appealing for their home? I know you've done a couple of things. Maybe you could talk about like buy downs, like interest rate buy downs.
Yes. Okay. Well, for a seller, number one is list the home at a realistic price. What happens is people that list their homes too high, they just sit there on the market, and it literally devalues the home. If you list the home at a good price, you get multiple offers. As far as 2-1 buy downs for buyers buying homes, the 2-1 buy down is a very popular option. We're seeing that because it is a buyer's market. Sellers are giving credits, or giving large credits. You know, we're seeing credits in excess of 10, sometimes even 20%. $20,000. I think we've done deals in your office where we've had a seller contribute $20,000 to the buyer so that they could do a 2-1 buy down and cover their closing costs. With the 2-1 buy down, we may lock in their rate at 6%, but the first year their interest rate's 4%, the second year it goes to 5%, and the third year it goes to that 30-year fixed rate of 6%. So what we're expecting is they'll start at the 4% and probably refinance to a lower rate within that 2-year period. If not, they need to be prepared for that 6% rate for the remaining 28 years.
Okay.
Yeah.
Good to have your worst case scenario,
Yeah.
but for the next year or two, you've got a lower rate, which keeps your payments down.
Yep. And if, for instance, they're in that rate goes back to 6%, most likely they're going to have equity. If they can't afford that payment, they should have an opportunity to sell that house, pull the equity out, and pull it out tax-free because the 2-year period is up.
That's a brilliant strategy.
That's something that we explain to our borrowers. Okay.
Yeah, that's wonderful.
Yeah.
So that's where it really is important to have a loan officer that is experienced and
Sure.
can give that kind of guidance to the buyers,
Yes.
right? Like, honestly, that hadn't occurred to me. Do that for 2 years and
if you can't make payment. And something else, most people that are buying homes nowadays, a lot of them are first-time home buyers. They're going to grow. They're going to grow in their career. Their income's going to increase. And so what seems like a really high payment, a struggle to make right now, 2 years from now may not be as big a struggle. And so, there's a lot of things to factor in. I always recommend to my borrowers, talk to your accountant, talk to whoever does your taxes. Look at the tax benefit of buying a home. What's your tax return? How much is it going to increase your tax return so that you can literally take that tax return, set it aside, and pull from it monthly to offset your house payment.
Excellent.
Your mortgage payment, yeah.
And I think that's something a lot of home buyers, first-time home buyers, don't realize that you get tax credits for your home ownership,
Yes.
right? And so with that, you actually save money on your taxes.
Pay less taxes, pay less taxes, potentially get a larger tax return.
Right, so you got to realize that it's a difference.
Yeah.
So. But it really helps make it more affordable to own a home.
100%.
Yeah, excellent.
Home ownership's the way to go. I tell people, if you don't own a home, come see me. Let me put you on the path to home ownership.
It really is important for so much of our financial future, right?
Yes, it is.
Yeah,
definitely.
Excellent. Well, that's wonderful. It sounds like you have a lot of really great tools to help buyers get into a home. They might think that it's not really possible, but then talk to you and you can show them how possible it is.
It is. It's easier than most people think. It really is. And we have a really good team. We do everything under one roof from application to funding. It's a very, very quick process, and we make it easy. We have a saying in our office: leaner's meaner. The less information we need to request from your borrowers, the better. Correct? You know what I mean? So.
Right.
Yeah.
Excellent. Yeah. Wonderful. Well, and I know from experience you guys do a great job, and
thank you.
Really,
thank you very much.
Yeah. Excellent. Well, we're so happy you came in today, and
it's great to be here. Beautiful day, beautiful view. Yeah, it is. I wore this sweater thinking I was going to be cold, and then I'm
right.
Beautiful.
Yeah, it's awesome. Thank you for coming. I guess we could open it up to the audience if anyone has any questions for Joe.
Does everyone qualify for the 2-to-1 buy down, or it depends on your credit?
That's a great question. I have yet to come across a borrower who did not qualify. The big thing with the 2-1 buy down is the cost. Okay, so there's an additional cost to it. You're basically paying that interest up front. Okay, so what we're finding though in this market, it is a seller's market, and a lot of sellers are willing to contribute closing costs or that potentially that money to help the borrower buy down the rate, or the buyer buy down the rate. So I have yet to come across somebody that did not qualify.
That's a good question.
Yep.
Yeah.
Hey, Joe.
Yes, sir.
Hey, I hear a lot on the news about inflation drives the interest rates, and that currently we're in a little state of inflation, starting to level out a little bit, it seems like. But grocery store prices are sky high, eggs, et cetera,
Sure.
everything. What is the direct relationship between inflation and how the feds decide the rates?
As far as, with inflation, the reason the feds are increasing rates to prevent inflation, to stop inflation, okay? That really doesn't have a direct impact on mortgage rates. There's several indicators. So what that does is that impacts say for instance the 10-year treasury, mortgage-backed securities. So when the Feds increase rates, it affects the other I'd say the other indicators that increase interest rates. Like I said, I referred to the 10-year treasury. The yield of the 10-year treasury is a huge indicator of interest rates, and it pushes up interest rates. As the yield goes up, traditionally you'll see interest rates go up. Mortgage-backed securities, that has an impact. The Fed's increasing the rate on the Fed rate being increased also has an impact on mortgage-backed securities, okay? That also increases rates. Another big indicator that people are unaware of is unemployment. Okay, as you see unemployment go up, you'll see rates drop. And what we're seeing right now, it's kind of a mixture. So you'll see, you could see in one day where unemployment goes down, but the treasury rates go up, okay? So, you know, there's just no rhyme or reason for what we're seeing today. I guess that's the best way to put it, yeah. But I call it market volatility. That's what we're dealing with.
Hey, Joe. Hi. How are you?
Hi. How are you?
You mentioned, like, you know, with the buy down that you could go down to like a 4%. Do you, in your experience, think that you'll ever see rates across the board hanging around that for everybody, or is the buy down the best option right now?
You know, that's a good question. The buy down's a great option. You know, as far as rates go, was it close to 20 years ago, we were locking interest rates in the 3s, and a couple years later, we said we'd never see that again. And then, you know, along comes COVID in 2020. So it's just unpredictable. My guess is, yeah, we'll probably see rates one day drop back down into the 3s. So I just, right now, I like the 2-1 buy down option. It just gives it, you know, unless you're comfortable with that 30-year fixed payment, you know, that's, if you are, great. But if you're not and you want to buy more house, this is a great option.
Just curious. I've known you a long time. I've never asked you this. What got you into the mortgage lending business?
That's a good question. I like to tell people I was born into this industry. My mother, my father, you know, my family. I have just, you know, since I listened to real estate and mortgage talk around the table growing up, and it was just kind of inevitable that I ended up here, I believe. I think it was meant to be. You know, there's some individuals close to me that I always say saved me and basically offered me the opportunity, and I was in a position where I jumped on it, and here I am today. But yeah, I was pretty much groomed for this industry from a young age. How's that? Yeah.
Excellent. Well, thank you. I think, any other questions? All right. Well, we want to thank you all for watching. We're excited to continue our workshop series. Be on the watch for our next one. We'll be looking into home staging, what you can do as a seller to make your home more appealing for the buyers and get you more money potentially. So thanks again for watching, and we'll see you next time. Thanks.
Thank you for having me. Cut. Time out. I know. You asked me that before. My voice and everything. My posture, my stuttering.
Well, since my baby left me.